It has been a very good trading week. Most of us, I don't need to repeat that, but most of us have participated in actual trading all of this week, and at different levels, most of everybody that was in the room or on the floor has actually made money. If you look at we had some very big moves on the Swiss franc. We're having some moves also on the dollar and on the yen. In order to get started, let's get started with the indices like we usually do. And there are a couple of interesting setups that you will be able to see on the chart today while I was doing my homework. I noticed them, so I'll share them with you. The dollar still, yes, we closed the week at the 74.74. It still haven't broken really to the upside. It's making attempts to push higher, but the index as a whole is still kind of a neutral pattern with a slight, if I look at the weekly chart, you could see that just over here we closed above the 74.40 level, and this is a neutral close. This is not it. Just slightly closing above the 74.40 is a positive close. It is considered an okay buy signal, but it is not one of those. I would tell you that this is a trend reversal or whatever, but based on that, our bias would be still to the upside as far as the dollar goes, as far as the dollar index goes, and that would be our guide in looking at the different pairs. And we would be shorting the dollar based upon the index below the 74.40, and that is a small or a low risk trade because our entry is about 30 pips on the index before we actually short it. But our bias is still to the upside. If you look at the currency of the week, primarily, which is the Swiss franc, I'll leave the Swiss to the end because there is a. If you look at the Aussie dollar, that's the weekly chart. We did have some buying come in into the Aussie the last couple of days, and you can see that we closed base at the 103.10, and our structural point is the 102.83. That is based upon the index. It is still a positive close. It will give us a kind of a positive bias to the Aussie, but once we get into actually more in-depth look on the Aussie, you would see that we actually, this kind of close or this setup is not really too positive for the Aussie. We might be actually looking at primarily selling the Aussie, or if we have a positive, not a positive we have, but if you wanted to have a high probability kind of trade with the Aussie, you would be taking the Aussie now because it's not particularly strong, but you want to go long the Aussie versus a weak currency, i.e. in this case the Swiss franc. So that might be a high probability trade that we'll be looking for. But the Aussie as itself is not particularly that strong, and your sell signal based on the index is only 20-30 pips away, pretty much the same as the US dollar. If you look at the British pound, yes, on the daily index, the British pound went above the 162.33. It is mildly positive for the pound as a whole, not the pound cable, not the pound dollar, but just the pound versus the CAD versus the Aussie versus the Swiss. So this move is mostly an upward move in the pound against the Swiss or against the Canadian or the Aussie. If you look at the Swiss franc, that is now the game. This is now where most of the action, most of what we see in the indices, whether the Aussie index or the pound index or even the dollar index, is a reaction to this. This of course is over 1,200 basis point on the Swiss franc, trading from an all-time high of close to 150, wow, 141, to come back down here. This is about a 7 to 8% decline, sell-off in the Swiss franc in the last 2-3 days, and this magnitude of selling that you see has translated itself in what you look at in the what we have seen in the Australian index. I mean, look at this, nothing particular. I mean, that is the oomph that we had in the Aussie. That is the move that we had in the pound. So you could see that actually the pound has reacted more positively to the sell-off in the Swiss franc. You can also see that in the dollar. I mean, the dollar didn't really move up much versus the decline of the sell-off that we had in the Swiss. And if we look at the euro, again, you don't see really too much of a reaction to the upside or too much strength to the upside in the euro as a result of the sell-off in the Swiss. Last but not least is the Japanese yen. This is actually strengthened on as a result of the decline in the Swiss, and the Japanese currency by itself, it is holding pretty strong. So you can look at the yen as so far this week what seems to be the strongest currency thus far. And let's look at the CAD. And look at this. With all the sell-off that we had in the Swiss franc, with all this seems to be, the Canadian seems to be the weakest of all currencies. So that's the CAD. You can see the reaction to the decline in the Swiss. You had a decline also in the CAD. You had not too much of a positive action in the euro. You had a good push to the upside in the British pound, and a slightly kind of a neutral action towards to the upside in the US dollar. If we're going to look at the other market components, because there is a lot of correlations that's been in work or in action this week. So we want to look at the gold and the precious metals and copper. So if you take a look at gold, of course it's still quite positive. We don't really have any trend change, nothing to tell us that is that we want to even consider getting long out of our long positions in gold. And this is actually a buy in the gold. This setup that you hear, the 170, the 1742 close, is actually a positive close in gold. And as you know, that the Chicago Mercantile Exchange have raised the margins for gold by 22%, and probably this is some what we call some long liquidation, people trying to get out of the gold because they have now are required to maintain high to put higher margins in order to hold on to their long position. So we got some long liquidation, but there is really no sell-off coming in, and that would be supportive to the Aussie. And in a way, believe it or not, it might be supportive again to the Swiss. It might have an effect on the Swiss. If you look at copper, it's pretty much in a neutral formation. We have made an attempt to reverse the trend, but we have yet to reverse, but it is in a negative territory. If you look at silver, this seems to be the most bearish of all. So what appears now that there is some liquidations coming out in the precious metals, and it might be going into some of the currencies. If you look at the US Treasury, you can see, look at this. I mean, the US Treasury, the prices of the US Treasury is rising tremendously. I mean, we are in a serious bull market in the US Treasury bills, Treasury bonds. This is the 30-year bond, and that means that people are scrambling to buy the US Treasuries, and that again is an extremely positive thing for the US dollar. So that's a positive component to the dollar, because in order to buy the US Treasury, you have to pay for it in US dollars. And that what you see that is this price is going up. There's a lot of competition on it, and also if we look at the stock market, the US stock market, again, is a stock market or having a mature financial market, something like the stock market like the S&P and the Nasdaq and stuff like that, US, in addition to the treasuries, is a good component that denotes an underlying demand that will come into the dollar. If people want to buy US equities, they will have to pay for it in US dollars. So if we have strong or a good chart, technical chart on the bond market and on the stock market, that would indicate an underlying demand that will be coming in into the US dollar. But the S&P here, like what you see on the chart, is not yet a buy signal. We are considered pretty much in a bear territory with regards to the S&P. So we're not really out of the wood yet. We might be looking for one more push to the downside. I'm going to look at the DAX now, because again, it is a major component in what's happening in the financial markets today, and it's something that we need to be aware of. This is the FTSE. And pretty much, yes, we had a good positive day coming into Friday, but by no means it's a trend change. And then we're going to wrap up and see what all that stuff means to us. In order to make a trade plan this week. This is the DAX futures. This is the German bond market, German stock market, and chart. This is an extremely bearish chart. We are considered in a bear territory. We had our trend change somewhere around the 6500. We may have a little bit of a slight short covering rally. We may. It's not really. I mean, as you can see, it's not. We should be looking at for a further decline. So what does all this stuff mean? We're having a bull market, if you will, in the bond market. We're having the beginning of a short covering rally in the S&P, but it's not yet a buy signal. And if we look at our currencies, we can see that the strongest currency as of today is the Japanese yen. It has closed the week up on 130s, and so it's extremely powerful, and most of the buying coming into the yen. The Swiss has been, of course, being liquidated, and this is a very bearish formation on the Swiss. But if you look at the Aussie, even though with the major sell-off that we had on the Swiss, we have a slight buy signal on the Aussie, nothing to write home about. But the one that I want you to look at is this, the euro. And there, this here, I mean, this is a weekly chart for the euro, and you can see now we're getting those kind of coiling effect. It's not really, I mean, you really can't find, I mean, if I draw this and I'm trying to find the lower end of the triangle so I can say that this is coiling, I really can't see it. I mean, if you look at this, I mean, you got the low from here, and if you wanted to do that, okay, you can say that now it is coiling, but there is all this technical part that we're missing on the chart, and if I wanted to find a way to draw something over here, I would probably do something like this. And again, I'm trying to get a visual wrapping of how this congestion area is forming itself. Now, if you see here, this is on the weekly chart. This pretty much looks like what we call, it might be, again, it's not too much of squinting to try to see something that is not there, but it's still, there is something, okay? And if I put a daily chart instead of a weekly chart, what we are going to have is what is technically known as the beginning formation of what is called a diamond pattern. Okay? Now, the diamond pattern is known to be the most bearish technical pattern that would ever be seen on the chart. I mean, whenever there is a well-defined or identified diamond pattern and it breaks to the downside, that would be the beginning of a serious bear market. Now, as of yet, it has not broken. So in this case, if the euro index trades below the 1.4, which is this level over here, which you guys might be the primary, the beginning, the first structure to the downside, that could be the beginning of a serious bear market in the euro. I'm talking about the euro itself, and it should take us probably back to the 129.55 on the index. So having said that, this means that the euro, based on what we see on the chart right now, is primarily the weakest thus far, and it is the one that's most likely to break, if you will. If we look at the US dollar, it's kind of neutral, so I'm not going to say bearish. We do have a buy signal above the 174, above the 74.40, so it's kind of neutral. If I'm looking at the Aussie, again, the same thing as the Aussie, with all the sell-off that we got in the Swiss. All what we were able to muster is we come back above the structure point, which is the 102.83, and barely close at 103.10. That move should have given us a thrust all the way up to the 104.80. So I'll be more inclined to be a seller of the Aussie on a trade below the 102. So I would put the Aussie on a mild sell, or a slightly sell, a little bit slightly stronger than the euro, but it is also a sell. If I look at the Canadian dollar, that is also weak, or as weak, if not weaker than the euro. So the euro and the Canadian are pretty much one and the same. So I'm going to put the euro and the CAD at the same level of weakness. Okay, the Aussie would be maybe slight weak. I mean, but it's not as weak, so it's going to be a little bit. Just give it 2 minuses. That's the Aussie, and the dollar is actually neutral. I mean, I can say that the dollar based on what I have seen now is kind of neutral, so I'm just going to give it 1 minus. So if I'm looking either to buy, I would be starting to buy things that, if I wanted to buy any pair that against the euro, for example, let me finish this before we get into it. And then of course the Swiss franc is, with all this sell-off, is extremely weak, but this weakness is a function, as we all know, of the intervention coming in, and there is a lot of saber rattling now that the Swiss National Bank wants to peg it to the euro, or wants to do whatever. So with that, as long as it's selling off, we will continue to be holding it. So this is a manufactured, if you will. This is not a genuine sell-off. It is a sell-off that as a result of people trying to get out because what they perceive as intervention. So we will go with it until, but by no means it is a trend change. If you look at the Japanese yen, this by far is the strongest currency. So the yen is the number 1 currency to be a buyer of. The second currency to buy would be the US dollar. If you look at the British pound, just to wrap it up, yes, we have a slight move to the upside in the British pound, so the British pound is also be considered for the time being as a buy. So we would be looking at the following. We would be looking at buying first the Japanese yen, so we want to be long the Japanese yen. And we also want to be long the British pound, but it's not as strong as the Japanese yen. So we will be looking first at the and of course the weakest of all here is the Swiss franc. So in this case, if I wanted to focus on the plays next week, I'll be looking at the pound Swiss. I would be also looking at the yen Swiss. I might be looking at the dollars. Might be looking at the dollar Swiss. So these are the three pairs I would be looking at. The euro Swiss would be an reactionary, but again, that would be a candidate. I might be looking at the dollar CAD. I might be looking also at the pound CAD, and I also can look at the yen CAD. So I can be shorting the Swiss in general, and I can be shorting the Canadian in general, and my first choice to buy would be the yen, the dollar, and the British pound. Okay? Let me stop the recording, and if anybody has any question, please let me know.